I'm so bored. What should I do? YouTube sounds fun to me right now. Wow, it looks interesting. Accounting in general. Come on, let's watch this, guys.
Oh my god.
Hello, welcome back to our video. Today we want to explain you about accounting in general. But before that, let us briefly talk about what accounting is. Accounting is the process of recording financial transactions pertaining to a business. The accounting process includes summarizing, analyzing, and reporting as transactions to oversight agency, regulation, and expansion entities. The financial statements used in accounting are a concise summary of financial transactions over an accounting period, summarizing a company operation, financial position, and cash flow. After you know the definition of accounting, you must wonder about how the history of accounting. So, the history of accounting has been around almost as long as money itself. Accounting history dates back to ancient civilization in Mesopotamia, Egypt, and Babylon. Lucas is considered the father of accounting and bookkeeping due to his contribution to the development of accounting as a profession. By 1880, the modern profession of accounting was fully formed and recognized by the Institute of Chartered Account in England and Wales. This institute created many of the systems by which accountants practice today. The formation of the institute occurred in large part due to the Industrial Revolution. Merchants not only needed to track their records by soap to avoid bankruptcy as well. So we move into next topic. It's about accounting cycle. You all must be curious. If yes, please turn up to Vivi.
Thanks for Ada, who is already described about accounting. Now, I want to teach you about accounting cycle. The accounting cycle is a basic each-stage process for completing a company's bookkeeping task. It provides a clear guide for the recording, analysis, and the final reporting of the business's financial activities. The accounting cycle is used comprehensively through one full reporting period. Accounting cycle periods will vary by reporting need. Most companies seek to analyze their performance on a monthly basis. Some may focus more heavily on quarterly or annual results. Before the further explanation about accounting cycle, let's get to know about accounts that often used in accounting. Current assets are assets that can be converted into cash within one fiscal year or one operating cycle. As a result, short-term assets are liquid, meaning they can be readily converted into cash. The examples such as cash and account receivable. Fixed assets are non-current assets that a company uses in its production or goods and services that have a life of more than 1 year. The examples are equipment or building. And the next is a current liability. Is one the company expects to pay in the short term using assets noted on the present balance sheet, such as account payable. Another one in liability is a long-term liability. Is one the company expects to pay over the course of more than 1 year. The example is bond payable. And we move into the equity. Equity is the remaining value of an owner's interest in the company after all liabilities have been deducted, such as withdrawals. money spent or costs incurred by a business in their effort to generate revenues. The examples are advertising expense and utility expense. And the last is accounting income. It's the change in net assets during a reporting period, excluding any receipt from or disbursement to owners. It is also calculated as revenues minus all expenses. Well, you have already known from the definition of accounting, the history until the accounts. But the important thing is the 8th cycle of accounting will be explained by.
Hello, I will teach you about first and second cycle of accounting.
And we will try describing for the third and fourth.
For me, it's the 5th and the 6th of accounting cycle.
And last, for 7 and 8 will explain by me.
The 8-step accounting cycle starts with recording every company transaction individually and ends with a comprehensive report of the company's activities for the desired cycle time frame. Number 1. Proof of the transaction. The first step in the accounting cycle is identifying transaction. Companies will have many transactions throughout the accounting cycle. Each one needs to be properly recorded on the company's book. Record keeping is essential for recording all types of transactions. Many companies will use point of sale technology linked with their books to record sales transactions. Beyond sales, there are also expenses that can come in many variants. The recording is based on the time the transaction occurred. Number 2. General Journal. The second step in the cycle is the creation of journal entries for each transaction. Recording is based on assessing data on proof of transaction. Chronologically, recording based on the date the transaction occurred. The general journal is part of the accounting record keeping system. When an event occurs that must be recorded, it is called a transaction and may be recorded in a specialty journal or in the general journal. There are 4 specialty journals which are so named because specific types of routine transactions are recorded in them.
Number 3. Posting. Once a transaction is recorded as a journal entry, it should post to an account in the general ledger. The general ledger provides a breakdown of all accounting activities by account. This allows a bookkeeper to monitor financial position and status by account. One of the most commonly referenced account in the general ledger is the cash account, which details how much cash is available. Number 4. Unadjusted trial balance. At the end of the accounting period, a trial balance is calculated as the 4th step in the accounting cycle. A trial balance tells the company's unadjusted balance in its account. The unadjusted trial balance is the carried forward to the 5th step for testing and analysis. The unadjusted trial balance is the listing of general ledger account balances at the end of reporting period, before any adjusting entries are made to the balances to create financial statement. The unadjusted trial balance is used as the starting point for analyzing account balances and and making adjusting entries. This report is a standard one that can be issued by many accounting software packages. It can also be manually compiled.
Number 5. Worksheet. An accounting worksheet is a spreadsheet used to prepare accounting information and reports. Accounting worksheets are most often used in the accounting cycle process to draft an adjusted trial balance, adjusted journal entries, adjusted trial balance, and financial statements. Analyzing a worksheet and identifying adjusting entries make up the 5th step in the cycle. A worksheet is created and used to ensure that debits and credits are equal. If there are differences, then adjustments will need to be made. In addition to identifying any errors, adjusting entries may be needed for revenue and expenses matching when using accrual accounting. Number 6. Adjusting journal entries. In the 6th step, a bookkeeper makes adjustments. Adjustments are recorded as journal entries where necessary. Adjusting journal entries are accounting entries made to a company's journal of accounts at the end of a financial period. The process allocates income and expenses to the actual period in which the income or expense occurred. This is done under revenue recognition principles in the accrual basis accounting, as opposed to the time payment was received or made under cash basis accounting. Adjusting journal entries are used to allocate: first, prepayment of an expense to the period in which the expense is incurred. Second, unearned revenue from a received prepayment to the period in which it is earned. Third is accrued expenses that are paid later to the period in which the expense is incurred. And lastly, the fourth is accrued revenue that has been earned but it is received later to the period in which it is earned. That's it.
After the company makes all adjusting entries, it then generates its financial statements in the 7th step. For most companies, these statements will include an income statement. A. Income statement. A report that contains a nominal account which is further to find out the loss or profit gain in the period. B. Capital statement. Report that contains in the initial capital period the company's profit or loss and try to find out the amount of final capital. C. Balance. A report showing the position of assets, capital, and liabilities of the company at the end of the period containing real accounts. A. Closing the books. Finally, the company ends the accounting cycle in the 8th step by closing its books. At the end of the day, on the specified close date, the closing statement provides a report or analysis of performance over the period. After closing, the accounting cycle starts over again from the beginning with a new reporting period. At closing is usually the time to file paperwork, plan for the next reporting period, and review a calendar of future events and tasks.
Alright then, see you again!
Oh, I see. Now I understand better about accounting.
Wow, so many explanation about accounting cycle ya.
Actually, what are the benefits of accounting information? I don't really understand.
Let me tell you the benefit of accounting information. There are: number 1, as a measure of success or failure of a business. Number 2, is needed by management to plan as well as evaluate and control the operational activities of the business. Number 3, presenting economic information of economic both external and internal to the company.
So that's why and what is included in the field of accounting, financial accounting, auditing,
Management accounting, cost accounting,
tax accounting, accounting information system,
Budgeting, government accounting, and public accounting.
Wow, there's a lot of things that we got from the video and from our conversation, like an explanation of what accounting is until the history of it.
And don't forget about account and the 8 cycle we watched for video.
yeah, how could I forget it? I still remember it clearly from that transcript until post.
Hopefully, the knowledge that we got today we can apply in daily life for the future.
Hello, my name is Myalda dari Koesasih.
Hello, my name is Vivi Nur Annisa.
Halo, my name is Adinda, Cita, Rizki, Mulia, Yustika.
Hi, my name is Inasha Nur Aisyah.
My name is Rizki Ramadani.
Assalamualaikum, my name is Aditya dari Giovannie.
Thanks for watching.
We are from the 4th group.
Don't forget to like, subscribe,
Comment
And share.
dan